So, as you asked, I'll try to explain how to use different indicators on TradingView. So, this is US 30 Dow 1 hour chart, and let's say this is the price axis. So, what we are seeing is price just consolidating and then bouncing off. So yesterday we predicted this move. Uh, we were at 34,900 when we I think talked about, or 35, something like that. And the price we expected to move ahead on the upside, are above that 35 to 100 mark. So it has done so. But what is the basis of like, uh, trending uh, chart like this you'd use? So, firstly, I think a chart like this would do good if we went to a longer time frame, because it is obviously trending for a long time, and whatever we look at in the 1 hour is going to come up oversold or overbought, something like that, depending on the direction. So first of all, we like want something that is oscillating, and that that uses standard deviation as a base core metric. So for that, we could use Bollinger Bands. If we go to the Bollinger Band, this one. So this one is pretty good uh, on longer to mid term. So this is set on chart. So it is 4 hour only. We could also set it 1 day. Could give us a bit of a better look on the market. Let's set it 21 day, which is roughly 1 month on these kind of assets. Standard deviation is set to 2, and source is set to close. So this is we could also offset it to 1 bar. It would just take like one bar off. But yeah, we don't need to do that. So let's just keep it as it is. And as you can see, the price got exhausted in November and is slowly channeling up. So the Bollinger Band is widening, because means the standard deviation is widening, because the market is slowly getting even more on the volatile side, because the price is already exhausted. So that's what's been happening. Now if we go to the same thing on the hourly charts, we would find that there the price is even more exhausted there. So it doesn't really do, because there is such volatility in on 1 hours time frames in Bollinger Bands. Sorry, I mean something like Dow or Nasdaq. These 1 hour charts won't work. It would sometimes look like this. So it is not a very good look, but we can expect when the price is narrower. So these narrow zones are indicative of a breakout on either direction. So it could go up or down, but something is going to happen when the Bollinger Bands are narrow. The Bollinger Bands are narrow. Something is going to happen. If we go back, it's it's very good indicator. But yeah, sometimes it can stay narrow for a long period of time as well. In any case, That's pretty much it for Bollinger Bands. It's a it's a good oscillator. It's a good way to briefly look at the market and see where the prices are. Like for now, it's getting narrower again, but it's not really that narrow. But we have a room of like 50 dollars on the upside as well, and it could also check the for 16,100, and it's also remaining up above the midpoint. So these things are ticked. So uh, looking about market, looking about the market on a broader basis is just ticking boxes. So what you have to remember what is where. So every thing we are looking at, we have to understand which indicator is where at the moment. So that's the root, like bread and butter of this. In any case, there are other ways to look at this also. So what we generally do is use these indicators like Fibonacci. So auto there is you can set auto Fibonacci on the depth. You can set 21. Uh, you don't need all this. You just need 0.618 1.6, yeah, then that's fine, and the negative 6.618. So these are the things you need, and you can extend it to left for better use, and you can set it right. So as we can see, the 618 is a pretty like a good area, has been also uh, it's, it's made some corrections. The one has also made some corrections. The So these things will it is an auto like adjustment strategy as well. So it's a good way to look at the market also. So let's just go to the longer terms and see how it fares. As you can see, it's also doing very well on the long term. It's 0 1 and then go back up. Now let's say we wanted to like not have this and set our own Fibonacci level. So this bottom is created when this bottom is created, you set it right, and it will automatically just fall in places. You can see, right, uh, that horizontal line that is created at 618. So it's a pretty interesting level as well. And then again, here would be something like your 786. So if we turn on the 786, it would be something around there, like I said. So it's around there as well. So these are the levels we need to watch about. And when this is breaking out from there, it's a pretty good indication. Like I said a couple of weeks back also, when price was at these levels, so we estimated that it was going to 16,000 next. But yeah, that's how to look at the Fibonacci as well. So Fibonacci you can use at any interval. Even in a 5 minute chart, you can just use Fibonacci as well. Just what we need to do is just find the low and the high of the recent move. So if we are looking at this period, let's say what last few hours. So this is our top. Obviously, this is our top, and if we set this as a bottom, we would find a pretty normal area of uh, support and resistance created. So as you can see, this is getting all the ranges covered. So this if it breaks out, you can target 35 300 again. So that's a good way to look at the market. But yeah, it mostly works on better on charts above 15 minutes. I would suggest using them on charts above 15 minutes. So that's Fibonacci levels. The one of the other indicators is what we use is the pivot levels. So this pivot point standard is something I use a lot. It's very good. We don't need the PS to just S3, S4, and S5, and R3, R4, R5, and we just set it to Camarilla, and time frame we can keep auto, number of years yes, and so level yes. That's fine. All this is fine, and we just go to no. We don't need 15. Because back is 5 is fine. So let's just change this to 1 hour and see how it has fared on Bitcoin. Uh, so these bars are predictive of these bars. Sorry, these resistance and supports are predictive of the next move, and these are predictive of the next move. So as you can see, this uh, this this area, so it got supported at this area uh, of price, which was on S2 as well, R4 as well for the previous move, and got turned to S3 for the next move. So it worked pretty well. And if we looked at the R3 from the previous, it was just really good, the move. So it would have been a move like uh, sorry, this is a short. We need a log. So this, yeah, it was a move like of 6.2%, and maybe with a loss, stop loss of 1%. So that's a pretty good trade uh, uh, as well. So it's a little bit trickier than Fibonacci, and it takes some getting used to as well, because you're looking at all these levels and you don't know which one to actually look at, uh, and which one to prioritize. So there is no priority here. R5s are more confirmed, R4s are less than that, R3 are less than that on resistance levels, and S3, S4, S5 like that. So something at S5 is more likely to getting support than S3, S4, and S4, S3 respectively. But that doesn't mean that the price is going there and all that. You just need to be on your feet, on your like outlook is needs to be clear, and when something is set like this is, so your price is set. So since you are obviously bouncing from these areas, you would expect some pullback to maybe here, maybe here. We don't know that where it's going to get support, but when it does get support here, when it is hit, we can target follow on the upside. So that's another thing. So it's on its own, it's trickier to use, sure, but like I said, you have to remember all the other indicators, where they are, what they are doing. So that's how we form a cumulative picture in our mind, that this stock or this crypto or this indices is doing that. So apart from that, I don't think I use many more indicators. There might be some others I use. Uh, there are thousands of indicators, obviously. Here, RSI and MACD, I don't think it needs much explaining because we have already done that a lot. There is also one interesting one which I use sometimes, is PSAR. So that's not a bad indicator in itself as well. So for the stocks, it's something which could be useful as well. The options trading we were talking about, it's it's pretty interesting. It is using the natural progression of a trend and the increment values to find if the price is all still in that movement, or it has reversed. So it's quite interesting as well. And if we look at it from a trading point of view, it could be good. So this is how it looks like. So obviously you can see even in the complicated times in oil, something like oil, it has generated good returns, but it is also prone to those uh, like really cross momentum, getting stuck on that. So because it is just like checking shift in price, it's not checking anything else. It's just looking at increments of price. It might get false signals a lot, but it is also something that gets ahead of a trend. It is very quick because it is only looking at the price, not anything else. So that's something also I also use sometimes. But I also, like I said, cumulatively think of the market, not individually per indicator. So these are, I think, I don't think I talked about other indicators much. So there may be one or two other indicators I use. For example, the moving averages. So moving averages are pretty simple. The normal trend on for a bullish moving average setup is 21 should be 10 should be above 21, 21 should be above 50, 50 should be above 200, and so on. So like we are seeing in something like US 30, everything is all orderly arranged. So this is our 200, this is our 200, this is our sorry uh, 50, then the green one is our so no, this is our 200, this is our 50, this is our 21, this is our 10. So 200 is very wide on the hourly scale from the others. But yeah, if we look at something like one day, it's how it should be on a bullish trend. And if we draw now a Fibonacci margin here, you will see that we are somewhat broken out of the 786, which indicates we are going to probably track that top sometime in the future, which was the 35,600 I noted about a week ago. So everything is based on a lot of things, not an individual thing. Just before I end this, RSI is simple. Always set it to 14 because everyone is looking at RSI 14. We can also look at RSI 21 if we are looking at the daily, which is the monthly. And we also can use the MACD. MACD has three components. There is histogram, which is shifting from bullish and bearish. So we can see the green bars are slowly changing colors, and the height is getting smaller, means the bullish strength that was there is decreasing. RSI is already above 70 on the 14 days, so that is close to 3 weeks of price action, only something like US 30, because we have a 5 day week, and 14 is 2 weeks and 4 days. So mm, it's pretty good as well on the works whole level. But yeah, it could help is it could still let it drag on to that high. The moving average crossover is another component which is might be looking to cross over soon. So that's something to be aware about. And also the VRVP, we have not talked about VRVP at all. It's very simple to use. We just look at when we are looking at this, the volume is distributed everywhere. But if we look at the last 3 months, let's say from start of September, the volume gets distributed. This area doesn't have any volume. So price at this area, when it's breaking out, we are sure that it is going to go to this level. So similarly, this one area has no volume. This area has no volume. So it's easier for bulls to track to this higher areas of 600, 600. Now, if we are looking at like let's say 5 minute charts on an intraday SPY or something like that, the VRVP comes into play like that as well. So it's a high volume area where the price has been stuck, and if it's breaking down, we might want to target these areas as well. So it's a high volume area. So let's look at this. That's the main volume. If we look at lies much down, and the volume in the last couple of days has not been that good. In any case, VRVP is not all that self-explanatory as well. It also needs to be cumulatively used with other indicators. It itself does not indicate too much, although it can provide a brief outlook of the market. But yeah, it's something that we need to be careful about using as well. If there is any other indicators you need explained, just let me know. I'll do that. Thank you.